Hey guys, SGT here. Really do appreciate you tuning in. We have the one and only SRS ROCCO here. His name's Steve St. Angelo. The site is srsrocco.com. We just started the interview right from the top, and I hope you enjoy it. Here it is.
John,
Steve-O, how are you, sir?
I'm doing pretty good. How are you doing?
I'm hanging in there despite the never-ending turmoil and pain and torture caused us by the criminal cartel.
Oh, I agree. It is amazing how propped up the market is, and the more it becomes propped up, the more leverage it is, the worse it is. And so the bigger the more it's propped up, the bigger the fall. And that's a shame too, because it could be very disruptive.
Well, I think the collapse is going to be very disruptive, and it's going to be very painful to everyone, even to those of us who have done our best to prepare. And, why don't I just ask you this right off the bat, Steve? With 2016 just 2 short weeks away, what do you make of the absurdity that is $13 silver?
Yeah, I would bet not one analyst in the precious metal community would have ever thought we would see is in the $13 range. I don't think they ever would have. And so it's amazing, because when you compare it to different trends in the past, it just doesn't make sense. And so going forward, to me, it looks like this is probably, and the prices could go a little bit lower, because I think what's happening, Sean, they're trading it on the algorithms based upon the oil price. And we can talk about that in the interview here. But I think that's how they're kind of trading it with the algorithms. So it makes some kind of sense. But unfortunately, when you've got 200 plus trillion worth of paper assets out there that really aren't worth it. So the market has been they've been totally brainwashed into believing those are assets, and then gold and silver are no longer assets. Unfortunately for the West, they're going to find out sooner than later that the East has been acquiring the majority of gold in the world, and I think this will end badly.
I think that one thing that needs to be said as we're looking at sub $14 silver here with 2016 just 2 short weeks away, your research over at SRS ROCCO is exemplary, and of course is posted everywhere, Steve. Silver Doctors, SGTreport, all over the internet. Your terrific work is being posted. And one thing as it relates to this sub $14 silver that I've been talking about a lot is John Williams' research from shadowstats.com, which indicates the $50 1980 high for silver in today's inflation-adjusted dollars equates to $600 an ounce. So what I want to ask you, Steve, is this. If $600 an ounce in today's dollars equates to the $50 all-time high, then what I've figured out is that in today's dollars, $13 silver is less than $1.50 an ounce in 1980 dollars. And I'm going to show the math here on the screen as how I got there. But so $13 silver, it's about $1 an ounce in 1980. So everybody has a time machine to go buy it. But guess what? It only goes down. So when does it stop going down, Steve?
I guess that's the $1 trillion question everybody wants to know. And there's a lot of good. There's several ways we can look at that. Number one, I think the biggest reason why the price of silver is so low and it continues to grind lower is due to the fact that this is no longer a physical economy. Back in the 1929, when we had the Great Depression, the price of silver fell, the price of oil fell, all commodities fell. And in 1933, they bottomed. Well, the stock market crashed too. It was down 80%. So what we had a total collapse of the prices of the stock market as well as commodities. This was also true for production. Silver production in the U.S. fell something like 70%. Globally, it was down, I believe, about 60%. And so we had a huge collapse in economic activity and prices. Now, this time around, we've had a very strange situation. We've had a collapse of oil prices, as well as gold and silver, and now, of course, the commodities are finally copper, zinc, and lead. They held up pretty good up till about 2014, and they started to fall over these last year and a half. So what's happened is all this inflation that John Williams from Shadow Stats talks about. Where did it go? Well, it didn't go into the metals, didn't go into other assets, other commodities. It went into financial assets. So that's where you can put the bullseye. Instead of all this money that investors had, putting it in real assets, it went into financial assets. So what it did is it kind of created a bifurcated market. And now what we're seeing this huge system is becoming unsustainable. And the Fed and central banks are doing currency wars, and they're trying to prop up the system. And so the leverage is so high now that it's not sustainable. So even though the price of silver and gold are both 4-year lows now, we're closer to a bottom than the stock market is to a bottom. And I think it's also the bonds. So we're looking at going forward in 2016. And I'd like to discuss this because this became a new realization to me about the debt. But as we go on into 2016, we're going to see severe stress on the global energy markets, which are going to translate into the bond and stock markets. And that's where I believe we'll start to see more wealthy investors make their way into owning precious metals. So I think it's been a long 4 years, Sean, but I think we're going to see a turnaround here in 2016.
Okay, Stephen, I do want to give a little credit to Jason over at Wall Street from Main Street. I listened to that excellent interview that Jason did with you not too long ago. We posted it at SGTreport, and he's a sharp guy. So I do want to talk to you about oil equaling energy and what you see coming here for the future, based on the fact that the massive debt increase over the past couple of decades, with the past decade specifically, has allowed the world to bring on more oil and more energy. And I know that you believe that the coming collapse of the debt is going to translate directly into a total collapse of U.S. and global oil production. So I want to talk about that. But do you mind first if we continue on the silver path and talk about your article, Silver Key Facts, 3 Must-See Charts?
Sure.
Okay, great. The 3 charts in this article, guys, that I think are very important are, number 1, the price of silver versus a barrel of oil. Number 2, silver mining production yields and costs heading in an opposite direction because production yields are declining. And number 3, Pan American Silver's estimated break-even number continues to climb. In 2004, it was around 650, and today it's 1682 with silver below 14. So, having summarized your 3 charts there, Steve, let's talk about your article, Silver Key Factors. Price of silver versus barrel of oil. Why is it important to keep an eye on that?
Okay, and I just wanted to show that the price of oil back in 2004, the average for the year was $38, and the price of silver at that point was $6.67, the average annual price. Now, this year, when I did the article, the price of silver was $14.11, and the barrel of Brent crude was $39. So we're seeing that the price of oil is almost the same as what it was back in 2004. However, the silver price is more than double of what it was. So I wanted to show that as a guideline, how these algorithms are kind of trading silver and actually making a market of silver. It's based on a commodity. But the difference is, and this is not even going back to the 70s when we saw our silver hit 49 in 1980. Let's just go back to 2005. And I have a chart that shows the top 7 silver companies. And their average ore grade in 2005 was 13 ounces a ton. And so what they were doing, they were producing, on average, these 7 companies, 13 ounces of silver per ton. Well, this continued to decline until 2013, and it fell almost 45%, and it fell to 7.6 ounces per ton. So what that means is these companies were moving more ore to produce the same amount of silver. Well, then Tahoe Resources brought on their Escobal mine, and it's a very rare find. Had a very high ore grade in Guatemala, and they brought that on, and it produced 20 million ounces in 2014, and its average grade was 16, and it's just an exception in the primary silver mining industry. There's really none out there like that. Well, it only pushed up the average for 2014 to 7.8. Well, I just looked at the data for this year, and there's been a lot of analysis saying I hear on the internet that they're high grading. Everyone's high grading now to make up for these lower prices. Well, it is true for some companies, but according to my analysis, these top 7, it's falling again. For the first 3 quarters, it's down to 7.4. And Tahoe is down from 16 down to 13, and their grade's going to continue to fall. So what does this mean, Sean? This means that these companies are actually processing twice as much ore today than they were just 10 years ago. Well, what happens if we go back to 1970? It was even higher, and I don't have the data, but I would imagine the average grades back in the 1970s were probably closer to 19, 20 ounces per ton. And so this is a reason why I don't see continual lower prices, because it costs twice as much now to move this ore to produce silver, and this will continue to decline going forward.
Yeah, that's very interesting. May I ask you this? I know how important oil and energy is in the mining industry, in the production of physical silver and physical gold. Zero Hedge is reporting that Russia sees no oil price recovery in the next 7 years. I would suspect that's a good thing for the miners, to the degree that the energy that they need to pull this stuff out of the ground is cheaper than anyone expected. Do you see that cost plummeting in future years, at least in part because of the low cost of oil and this lower cost of energy that we're seeing?
No, I don't. And the reason why is we have there is inflation everywhere, and it's just not in oil. It goes through the entire system. And so it's either wages or it's product or whatever. Now, we could see a further decline, but it'll be nothing like it was in 2004, because again, there's twice as much ore grade that has to be moved in the primary mining industry, and this will continue to fall. It'll just cost more to produce silver, even if we have lower oil prices. And now, this is interesting. This gets back to the sustainability of the U.S. and global oil industry. I spoke with a gentleman who's in Texas, and he is a president of his own oil company. He's a geologist. He's been looking for oil for 35 years now. Knows everybody in Oklahoma, Texas, and Louisiana that looks for profitable oil. That's conventional oil. He says none of the guys that he deals with would ever go after shale. That's the public companies. And so he knows a lot of folks who've been looking for oil since the 30s, and he's done deals with the bunker hunt. And so he will not look for oil until it gets $60 or $65 a barrel. Won't even start looking for oil. So we're at 37 right now. This is what's interesting that no one's talking about. We've all heard about the earthquakes that are starting to increase in Oklahoma, and there's been speculation that it's due to the fracking. Well, he says it's not the fracking that's doing it. It's the water injection, because when you use these hydraulic horizontal wells, you have to frack water in there. With the oil comes a lot of wastewater. When they can't dump it above ground, the EPA tells these companies they have to re-inject it in the ground. So no one's looking for oil in his business. What they're looking for, some of them are actually drilling water injection wells, because there's so much water coming from these shale oil wells. Well, the EPA is starting to crack down, and I'll tell you what's interesting, Sean. Just a couple of days ago from the Associated Press, less than a week after state regulators shut down 7 waste disposal wells in Oklahoma, 2 companies being sued for earthquake damages are asking the case to be dismissed. It is Spess Oil Company and New Dominion. And so what's happening, we're starting to get people they're getting damages from earthquakes on their homes. They're starting to sue oil companies. Now, where does it go from here? I don't know. But I think this is a major factor going forward. And so it's not the cost of oil that's going to drive the price of silver and gold higher, or their production costs. It's the lack of it. And I think these lower prices of oil, Sean, they are gutting the U.S. shale oil industry, and they're also creating havoc in the global industry as well, because we know Saudi Arabia, they can produce oil at 40, but they need 100 for their budgets, their state budgets, to break even. So this is a major problem going forward.
Well, let me ask you this, because nobody keeps their eye on the ball probably better than you as it relates to the COMEX and, for instance, the SGE, the Shanghai Gold Exchange. Koos Jansen, of course, does great work in that area. What are you seeing in terms of the real world, in terms of physical gold and silver moving around the world, in terms of the real numbers? Because we all know the COMEX is a hoax. It's as big a hoax as Sandy Hook. I mean, there is absolute propaganda coming from this government as it relates to the economy, as it relates to the health of the dollar, as it relates to the long-term outlook for the economy. Where would you like to go from here? I'd love to get your opinion on what's going on in the real world as you see it, Steve.
Well, that's a good question, because I've been looking at the Shanghai Futures Exchange silver inventories. Now, they did bottom in the middle of the year, and they were rising for the last 4 or 5 months. But they kind of stalled out this last month. And what's interesting, the COMEX silver inventories overall, we know the registered has fallen significantly, as well as the gold. I mean, it's a joke. The inventories on the gold COMEX are less than 5 tons now. And what moves off the Shanghai Gold Exchange sometimes in a month is 100 plus tons, 200 tons. So the COMEX exchange is a joke. But to find out what is happening, I thought for sure we would start to see a build in the silver inventories on the COMEX. Just using that data for whatever it is. We had the same thing happen in 2012. After the price of silver peaked in 2011, started to come off, we saw a massive withdrawal of silver for almost a year off the COMEX. But then it started to build in the end of 2011, and it actually built from 2012 all the way to 2015. And so now, just in this year, it's declined significantly. And again, I thought after we had that shortage of retail products from June to September, I thought we would start to see an increase of silver inventories at the Shanghai Futures Exchange in China, as well as on the COMEX. And guess what? They haven't. They've been kind of treading water recently, but I know industrial demand is falling. I've always said, and I continue to say, industrial demand will continue to fall. It will not be a driver for the silver price. It will be investment demand.
Right.
But for some reason, gold continues to move east. And I think we're still seeing major buying off the radar of silver, because I just got the September tables from the USGS. Mr. George sent it to me today, and I'm going to put a report on it. But we had a record import of silver in the United States of 533 metric tons, the most this year. And so it just goes to show you someone is acquiring this silver, and I think after this Fed meeting, we will start to see what's going to happen. I don't think 5 tons of gold on the registered is going to last. And what is the paper price, the paper ratio now, Sean? Is it 300 to 1?
Yeah, the last I checked, I think it was 298, 299 to 1 on the COMEX.
Yeah. We look at that data on an ongoing basis, and it is unbelievable to see the amount of leverage in the system.
Yeah.
But I do think there is still a lot of buying of silver, maybe not retail, but I think there's silver being acquired off the radar, even now, because we should see a build, because overall demand has kind of fallen a little bit, but I think the wealthy are still buying a lot of silver and gold.
The thing is, Steve, is that, the bottom line is we continue to see paper games endlessly, like we saw on Black Friday. I think they threw 18,000 gold contracts into the market, which was $18.1 billion in notional, I think, driving the price down. And it's great, because if you look at the silver and gold chart, When gold goes down, silver also plummets, and when gold skyrockets, silver goes up a little bit, but I mean the chart skyrockets, and silver follows it. So it trades as a monetary metal, but they love to tell us that it's only an industrial metal. But it really does trade like a monetary metal, and I think you're right. I think the deep-pocketed money that knows what's going on is acquiring both gold and silver. But the bottom line is this, right? Warren Buffett, who I don't care for very much since he's really outed himself as a bit of a globalist, said one of his famous quotes is, "Opportunities come infrequently. When it rains gold, put out the bucket, not the thimble," end quote. And I truly feel, Steve, that silver at 13 is a put out the bucket time. They can't literally take it to zero, can they?
I think that comes down to the 2 points we're starting to see. You watch zero head, you look at the markets, what's happening. Dividends are being cut. Now, maybe the wealthy hedge funds or wealthy investors, even institutional investors, were looking at these share prices, and maybe they're a little concerned, but at least they were getting dividends. Well, we know even a lot of companies were borrowing money to pay dividends, and this was, we see this happening now. These dividends are being cut back. Well, I think that's just going to continue, and it's going to get worse. So if once share prices start to fall and there's no dividend, then why be in the stock market? And then the other thing is, we are here in Canada may go into negative rates, and the United States might follow suit. We're at zero interest rates right now. And no one's making any money having their money in an account. What happens if there's going to be negative interest rates? So going forward, I think we're going to see negative interest rates because that's the logical progression. And I'll explain that in just a minute. So the whole notion of not owning gold and silver because they don't provide a yield doesn't matter anymore because you're not getting any dividends, share prices are falling, and pretty soon we may see negative interest rates. So why have your money where you have to actually pay the bank to have it in there? So gold and silver become the wealthy and institutionals' go-to asset because at least it's a store of value. You won't get this negative interest rate. Now, the reason why I say this was a logical progression, I didn't realize this was a recent realization for me, and it's from Gail Tverberg's word on Our Finite World. I thought we couldn't afford high energy prices. I thought it was like $70, $80, and it really started hurting the market. Well, once it gets below $70, $80, it starts hurting the oil industry. So it's a catch-22. If it gets too low, it kills the oil industry. And if it gets too high, it destroys the economy. Well, I didn't realize it's not $70, $80. Sean, it's $20, $25. Ever since the 1970s, there's a chart showing this, we've been adding debt. Once the price of oil got over, adjusted for 2014, $20, $25. We started adding more and more debt. And the higher the oil price goes, the more debt needs to be added. And so it didn't make sense until I saw it. And this has been just in the last month I realized this. All that debt that you see out there, it's energy debt. Because we have to burn energy, there has to be economic activity, and that's what pays back debt. So all the debt we see in the world is energy debt, one way or the other. Why? Because the wages have not kept up. So because wages haven't kept up, the Fed and central banks have added debt to keep people buying things. Now, when the central banks and the Fed have $18 trillion in debt, you can't service it at normal interest rates. Can't do it. It's impossible. It becomes unmanageable. So interest rates have to fall. So when there's too much debt, everyone starts to decline their interest rates. And then what's the next thing? The next thing is negative interest rates. So even though precious metal investors are looking at this and they're getting frustrated, I am frustrated to see this happening, but as the time goes on, it becomes worse and worse for the system, especially this highly leveraged debt-based fiat monetary system. So I think going forward, we will see an ongoing collapse of the energy industry due to this low price, and it's going to put severe stress on all these paper assets, whether they're stocks, bonds, and even real estate. So that's why, to me, the best investment is to be in physical gold and silver, even though you have to put a clothespin on your nose right now and understand that. This is not a 5-10 year program. I see this unfolding in the next several years.
Yeah, I agree with you. And in an environment with negative interest rates, suddenly gold and silver are essentially giving you a return. And you know what? The bottom line I was thinking as you were talking to, Steve, is that this all makes perfect sense, right? In this paradigm of endless lies, right? As Orwell said, freedom is slavery, ignorance is strength. One concrete example that I point to a lot is that the Patriot Act is the furthest thing from patriotic. Of course, in an environment of endless fiat dollars being hyperinflated by the Fed, $18.5 trillion in debt, stated debt, of course, physical silver is going to be painted by these powers as worthless. You do not want to turn to physical silver and or gold in a situation where the dollar is king. But the dollar is not going to be king for very damn much longer, is it?
No, and old George Carlin, loved his comedy. He said it correctly in one sentence. The whole system is a lie, and if one truth was told, the whole system would collapse. And that's the thing. When you're in a lie, you have to continue with the lies, because when the truth comes in, then the whole system just kind of unravels. And that's what we're seeing. And let me just give you one little piece of data point about the energy system here in the U.S. Art Berman. 3 big shale companies, Pioneer, EOG, and Continental. The first half of 2014, their free cash flow was negative $0.8 billion, almost $1 billion, negative. This first quarter, or this first half of 2015, their free cash flow jumped to a minus $2.8 billion in just 1 year. It's that much worse. So all these energy companies are hemorrhaging debt. And low interest rates allows them to continue this kind of Ponzi scheme. But unfortunately, as we're starting to see on the alternative media, the reason why they're surviving, Sean, is this capital is going into them. Like Chesapeake was getting, they're paying like an 8 or 9% yield on a bond or debenture. So people were getting 7, 8%. That's where the money was going. Well, I just heard their bonds are now worth 27 cents on the dollar.
Yeah, I read that. I just read that yesterday.
So that's just one company. The whole industry is like that. And so here's the thing. When this collapses, when this debt collapses, when the industries fall and we see bankruptcies, energy production collapses because we can't afford it without the debt. And that's when the realization is. It's kind of like the king with no clothes. It's like moving the curtain and seeing the Wizard of Oz for what he is. We will see what assets are worth it, what assets aren't. And I think this is when and it won't take many. I mean, it wouldn't take many institutional buyers coming into physical gold and silver, and it would totally lock up the whole market within no time at all. And so this is the problem we're at. The leverage gets worse, and when it falls apart, there'll be no available gold or silver.
Yeah, I think you're right. And again, as I was saying there and quoting Orwell, freedom is slavery, ignorance is strength. And we truly do live in a paradigm where the mainstream mockingbird media tells us, and the president tells us, and the warmongers at the Pentagon and in the Senate tell us, war is peace. We need to go fight ISIS to protect our liberties and to prevent war from coming here. So we need to go to war to prevent war, because war is peace. And meanwhile, they're bankrupting the treasuries and they're manipulating the markets to try to get people to believe that paper has value and physical silver and gold do not. That's the paradigm in which we live, and that's why we know what we need to do. My guest has been Steve St. Angelo from SRSROCCO.com. Steve, we appreciate your voice, your intellect, your research, and your time. Thank you, sir.
It's been a pleasure, Sean.
Pleasure's been all mine. And guys, thank you so much for tuning in. Can't thank you enough for your time. Can't thank you enough for your support at SGTreport.com, thephaser.com, and thelibertymill.com, where real news 24/7 is our goal and our promise. God bless. Bye-bye.